there are two types of life insurance in general that you can purchase. It's either a term policy or a permanent policy. Now, there are different types of term policies. It could be a 10-year, a 20-year, a 30-year. I've even seen a 15-year term policy. And with permanent, it could be a whole life or a universal policy. And that can vary as well based on the company. But generally speaking, to keep it very simple, you have term or permanent. And we're just going to spend a few minutes talking about the difference between the two. With term insurance, term is just that. If the policy is a 10-year or 20-year or 30-year, you have that life insurance benefit available to you during just that term. And once that term is up, if the policy is in use, like your auto policy, then the policy is no longer available and that death benefit isn't available if something were to happen after that term. The benefit of that is generally term insurance is a lot less expensive than permanent insurance. So it allows you the possibility of buying more insurance based on your budget. So if you have kids and you know your kids are only going to be in your house for a long time, you can use term insurance to make sure your family is protected and purchase enough insurance to make sure they're taken care of. The downside of term insurance is just that. After the 20 years, the 30 years, or the 10 years, you'd have to purchase another insurance policy in order to pick that up. It's not generally renewable. There are some conversions that you can do, but generally your price is a new policy at the time that you're there. So if you bought a policy at 20 and now at 50, that 30-year policy is completed, now you're paying rates for someone at 50. So for someone at that age, it costs more. So that's kind of the downside of term. So let's talk about permanent insurance. With permanent insurance, whether it's whole life or universal policy, with that one, as long as you make the payments, that policy is available to you as well as the death benefit. So it's kind of like a lifetime policy based on the policy you have. And with that, the benefit of that, of course, is it's always there. Most policies, the premium is level, so make sure you are aware of what type of policy you have. It's just always there. Now, the downside of a permanent policy, because you have that guarantee that that policy will be there for you, it does cost more to have that permanent policy in place because the insurance company is making investments along the way to make sure the money's available for you. And many of them may provide cash value, and that's a benefit to some people. But with that cash value, you're actually paying for it. And I always tell people, if you want it to be a savings account, just open up a savings or investment account instead of using this life insurance as an investment or savings account. It really should be for just that, providing a benefit upon your death or whomever's the insured is. So with that, that's just the basics of life insurance. Both of them can happen together. You can buy a little bit of term and a little bit of permanent to make sure you're equally protected. But my advice to my clients is buy something. Every day you get older, everyday life insurance costs more. So look at your budget, work with your insurance professional to find out what is the best scenario for you. But my advice to you, whether it's term or permanent, buy something to make sure you have it in place before either you get older or there's a medical condition where you can no longer pay for it or afford it at that particular point in time. Thank you for your time today. And if you wanted to ask more questions of me and my team, or you needed someone to review your policy, we're here to help. Just give me a call at 704-960-1860, or you can email me or visit our website at tillmaninsuranceadvisors.com.